I guess Tether's really the thing that people are waiting for to fall. I mean, everybody really is like looking towards Tether to inevitably collapse, and people are saying it would happen sooner than later. And if it's true, if Tether is not backed, yeah, it would definitely be better if it happens now than it happens when crypto achieves more adoption. I think that could really be devastating. But what I wanted to share was an article by an article that by Revolver News. You could check it out. That actually covers. They do unbelievable investigative journalism. I mean, just top notch investigative journalism. And they did an article covering why Tether may not be backed 1-to-1, and they do bring a pretty big case for why shady things are going on. So the reason why, what really got my attention is that Mr. Simon, our friend Simon Dixon, our friend Simon Middleman Dixon, Suck Middleman Dixon. I'm sorry. No, I like Simon. He's a good dude. He said he's invested in Tether in Bitfinex, which he was invested in Celsius, and we know he's invested in Bitfinex, which is an affiliate of Tether. And Revolver is saying that it could be FTX on steroids, which I think it could be. But I just highlighted some of the. This is a very long article. I can't read the whole thing, but it says this is really the case that Tether is not backed 1-to-1. It says USDT, or Tether, is what is known as a stablecoin. A stablecoin is a cryptocurrency that, instead of fluctuating in value, is intended to hold to a consistent price. Tether is a USD stablecoin. Each Tether is supposed to be equal in value to $1. While most cryptocurrencies are widely speculative and backed by essentially nothing, each Tether is supposed to be backed directly by US dollar or an extremely liquid or reliable investment like a US Treasury bond. But there is no evidence Tether actually works this way. We repeat, there is no proof that Tether stablecoins are backed by the store of tangible assets that is supposed to justify their value. It says, despite being first released 8 years ago, Tether has never been audited in any way. It first promised an audit in 2017 to, happen eventually. How's that coming along? As reported by the Wall Street Journal, Tether says audit is still months away as crypto market falters. So in 2017, they promised an audit, and 5 years later, there's still no audit, which is, very fishy. And you see the same thing with Coinbase. Not the same thing as in there's a 5-year window, but Coinbase refuses to do an audit, and that's unacceptable in my opinion. Binance, did it. They did the proof of reserves thing. I'm saying it's something that they're very capable of doing, and they gave a little Twitter thread. I don't know. And then Grayscale also, they're saying security concerns. I don't know. That's very, very fishy. I mean, this is something that happens in crypto all the time, where people get audits and they're fine. But I don't know. The company has been promising an audit since at least 2017. An audit is likely months away, says Paulo Ardonio, Chief Technology Officer of Tether Holdings, which issues the Tether coin that recently carried a market value of $68 billion. So he said things are going slower than ... we would like. Instead of a full audit, Tether, like other stable coins, publishes an attestation showing a snapshot of its reserves and liabilities signed off by its accounting firm. Audits are typically more thorough than other types of attestations. The attestations for some crypto companies sign off on the numbers provided by the company's management for a specific date and time without testing the transactions before or after that date. That process can make the reports more vulnerable to being used to paint an unduly rosy picture. So attestation is only at the current time where they take the snapshot. They're back 1-to-1. For the amount of Tether outstanding, there's an equal amount of US dollars in their reserves, or US dollar equivalent assets like treasury bonds, like short-term treasury notes, whatever, in their reserves. But here's why that attestation is very fishy, because it says in 2017, attestation of Tether was skewed by its sister company Bitfinex. So sister company Bitfinex, which banked to the past. is an investor. It said it transferred 382 million to its bank account hours before the accountants checked the numbers, the Commodity Futures Trading Commission said last year. So that means that was when, yeah. Take a moment to register that. In 2017, when Tether's total market cap was still under 1 billion, it needed a last-minute transfer of 382 million just to slide its way through a non-audit attestation of its assets. This is ominously reminiscent of the accounting trick used by borrowers to obtain so-called liar loans in the run-up to the 2008 subprime mortgage. So the 2017 attestation incidentally led to the Commodity Futures Trading Commission fined them 41 million last year. Tether also paid 18.5 million fine to New York State to settle claims that it misrepresented its reserves. The settlement forced Tether and its associated Bitfinex exchange to cease operations in New York. Crucially, none of these fines have fully exposed how Tether works, or forced it to change its methods, or even compelled it to admit wrongdoing. Tether essentially made a political payoff, it seems, and moved on. And it says here, it's important to state that what is happening if Tether is not actually backed by the dollars that it claims. If Tether Limited is pumping out new tethers without actually taking in the equal amount of USD, then it is essentially a private-run money printer. Yeah. So that's that. You can check out the entire article. We'll link it in the description. But my question really is, so like, does Simon know about this? And if so, why is he still an investor in Tether? And why should he be trusted to solve this issue of counterparty risk in Bitcoin? That's really the question. It's like, I don't know. What do you guys think? But yeah, so they're saying, so at the time, Tether only had 1 billion outstanding tokens, and 382 million had to be transferred from BitConnect in order for the snapshot, to get the green light from the accountants that they're back 1-to-1, right? Just for that short period of time, they had to transfer 382 million, which means, according to that means that they were fractionally reserved then, because that means they had a 1 billion minus 382 million, which is 618 million. Only 618 million tethers were actually backed by USDT, or by US dollars, or the equivalent in assets or whatever. And now Tether has 60 billion outstanding. So does that mean, so what is actually real and what's not? That's really the question. According to that ratio, that would mean that it's like it's fractionally reserved by 68% if that's the case. But we don't know, because there's no audits. And yeah, I think that really needs to be solved. Does that mean it would end crypto? Well, I guess the good news is that Tether's not the only stable coin out there, right? It's a smaller percentage, and hopefully the other ones are backed. I think they say Paxos is very credible and USDC is very credible, but I don't know. I guess you got to do your own research. But that does mean that if let's say a lot of the US dollars that are used to buy, that are tradable, redeemable for Bitcoin, are actually not worth $1, then that could really lead to a serious cascade, and that could bring us probably below 11K. Does that mean that crypto's done? I don't think so. There's still a lot of money in there. There's really still there would still be some sort of arbitrage. Let's say, Tether would be able to redeem 60 cents on the dollar. So then its peg won't, it's not a peg, it would be pegged to maybe 60 cents. So, that kind of thing. And then hopefully people would take that money that they used to redeem the unpegged Tether, if that's actually the case. It hasn't been confirmed or anything. It's definitely fishy. They could use that maybe to buy into more credible stable coins or trustless stable coins that are sustainable for the future. That's really what a healthy correction would be. You'd be getting this nonsense out of the system in order to in order to really in order to have more honesty and integrity and forwardness, I guess, in the crypto markets.